And there's something wrong with gold. I mean, we've had amazing inflation numbers for a year now, and I think gold is lower than where it was a year ago.
When volatility increases, the smart people get out.
To me, it just, indicates that the motion is started. So you can see that these three bars, and whenever I see three like that, and you can see before that, it was so orderly. And then the emotion, the fervor, the speculation, the FOMO, the fear of missing out. And then you buy it right there, and then that's the end. So Roblox to me feels like that same thing. Now, gold has had all of these little bottoms, these key reversals. Typically, my rule is when I see these things, these are indicators that, but this whole pattern is just, I've been very skeptical of this thing. And, you can see that we just got out of this, and it was a big bull trap up there. We had a key reversal after it made a new high, and now we're right back down. And so I think, gold's going to offer an amazing opportunity on the downside. I think everyone's been talking about this huge inflation, although the rates look like something is happening. So I don't ask the reasons why. Like gold's been kind of treading water in this ascending, broadening thing, which is a neutral thing. You could have kind of continued higher after this. But, if we break, I mean, this thing's going to come all the way back down here. So, I think we're on the cusp of, an amazing, inflection point. 1750, to my mind, is just one more, thing to try and hold this thing and maybe get another lift off. But if it fails, I think you're going to see a complete detonation in gold. And there's something wrong with gold. I mean, we've had amazing inflation numbers for a year now, and I think gold is lower than where it was a year ago. So, the whole inflation hedge, story of gold is kind of disappearing. And they're saying, well, maybe Bitcoin's a new digital gold and what have you. So, I don't know about all of that. So to me, beyond meat into any rally, it looks like it's on the lows. It closed on the lows. That thing looks like it's going to go lower. It looks like I need to buy some more puts for next week. It's so hard to play this thing because it's moving in very small increments, and you're paying quite a lot for the option premium. So it's very difficult to, play it now. So what I've been doing is, getting the, slightly out of the money. I'm not going too far out. And then every time it pushes. So yesterday, when the market started crashing, I actually started getting out. I'm just so used to it looking good and then rallying. So I got out of all of my puts. And now, it's like, I'd hate to see this thing go. I mean, the easiest thing is just to be short the stock. Because this will be in the 50s in a not too distant future. So you kind of just need to be short the stock. If you play the options, it's a very tricky game where the options are becoming more and more expensive now. I used to be able to buy these things for a lot less and so the next one is December 3rd. So we're trading at the 74, as you can see, or 230, which means your break even is, 71.70. And then, I always look at these options with the view that I need to make at least 2 to 3 times what I put in to justify that. So I need this thing to go to, 70 by next week or 68. And the way this is going, it's just in free fall. So, my view is I just wait for those, things where it starts rallying. And then I buy the puts. You don't want to really chase into a lower move. Beyond Meat usually goes lower, and then they have this rally, and then that sucks the wind out of your premium. So you can see we're making a new low this week, and by end of today or Friday, this thing could be a lot lower. Even there's nothing to hold this thing up anymore. I always said under 100, there's no more support left in this stock. It's just the next support level is 50. Or 40. And that's, I think, where it's going to go. And it's probably going to take out those, IPO lows. This will be a $20 stock. So,
Murray says real assets like metal might do well in the economic environment we are moving into. This is one view out there.
well, that kind of thinking, then why is gold looking so bad? I mean, and that's the kind of thing, it's hard to know where to hide in this environment. I mean, because gold looks terrible. Silver, silver hasn't made any move for a year. So you've been in the worst inflation we've had in 30 years, and silver's in the same place that it was a year ago, and looking like it's going to go lower. So, it's been very difficult. And I think about, okay, where is the safe place to hide? Energies look good. So this is Freeport McMoran. It's one of those mineral things, but, it's not on new highs here. Devon Energy has been one. So these energy plays have been good, but so Devon Energy looks like it's, knocking on these resistance and wants to go higher. So the energy really looks like I'd rather be in energies than metals right now. Chevron looks like it's, still intact. Exxon. A little bit under. So, but, eventually those get rated too. So all of these asset groups, one after the other, get, they become thematic, and then they get tired, and then they get punished. So, for right now, so the XLE is, I think, the, the proxy for energies if you want to buy an ETX. And I think the XLF is the ETF for the financials. And that's probably the place to be, the XLFs. It's just, you can see the path of least resistance higher. You can also buy call options on these things, so you can get a little aggressive too. But to me, this is, if you want to go long and have a safe place to hide, I think JP Morgan or just in the XLF ETF is, this path of least resistance is higher, and this thing looks like it wants to keep going higher.
So you can see, 45 is 1.3 million.
$1.3 million short.
So popped out a profit for 118,000 there.
So you can see how this is going crazy now. You can see how the market just going nuts.
I bet like $1.6 million on this position. I'm showing right now $23,000 gain.